work here at LevelSet, and we also have our speakers for the day, and I will let them introduce themselves. Rain, you want to go first?
Sure. Yeah. Hey, I'm Rain Martin. I am based here in New Orleans. I come from a background in banking and then, doing a specialized construction financing. So happy to be here.
Awesome. Thanks,
My
Rain.
name is Alan Francis, and I'm the operations credit manager for LevelSet in material finance. I've got about 28 to 30 years of credit management experience, and basically Rain and I are on the same team trying to help people get financing for their projects, and just been in credit management with construction and electrical.
Awesome.
You see that Alan already outdid me with the introduction. So I got to step up.
Today's webinar is going to be a fun one. We have some really good personalities here with us today. We all three mentioned that we work for LevelSet. And just to give you a little bit of background, LevelSet is a construction cash flow solution that helps contractors and suppliers protect their lien rights, automate the paperwork process, streamline construction financing, and so much more. We are so happy to have you on this call today with us. And a couple of things that I wanted to go over. So why do we need options when it comes to payment solutions in the construction industry? We have the cash flow problems, which are the #1 reason that construction companies fail. You need cash reserves for your day-to-day and short-term financial needs. And if you want to grow your business, you really do need more liquid capital. And how do you obtain it? How do you get there? So today we'll talk about the different payment options that are available to you and which one might be best to help you grow your business. Construction businesses do typically have large upfront costs that can burn through cash at the beginning of a project well before your payments come in. This gap makes it really difficult to manage your cash flow from the start of the job. So knowing your options can be a game changer for this business. But I do have one question for everyone. Are they one size fits all? That's really what we're going to be talking about today within the next 30 minutes. I do want to encourage everyone to use the chat box if you have any questions. We are here. Utilize Rain and Alan while they are here with us today. Ask them as many questions as you possibly can. They love answering questions. I know because they answer mine day in and day out. All right, so I think we're going to dive right in. We're going to start with factoring. Factoring is a term that I did not hear until I came to the construction industry. And so Rain and Alan, do y'all want to give us kind of a 30,000-foot view of what factoring is and what it means for contractors and subcontractors?
Yeah. So looking at factoring, you look at taking your existing outstanding invoices that you have on jobs, and you partner with a factoring company who provides you funds up somewhere between 70 to 90%, usually right around 80% of the funds you get up front. Then you get the rest of it back after, or you receive the remaining amount minus some sort of fee, whatever the fee structure is going to be once your customer pays. So.
And basically what you're looking at when it comes to factoring is factoring becomes very intrusive. You've got to be willing to not only open up that relationship that you have with your special customer that you're dealing with. They've given you an invoice and now you're turning that invoice over to someone else. And they are now going to become the people that talk to your customer about payment. They're also going to make sure they get theirs off the top. So they're going to be, to qualify you, they're going to want extensive amount of banking information, maybe up to 1 year of bank statements. They're going to know that you paid your taxes. They're going to want to have tax records and make sure that there's nothing outstanding on your credit that could possibly cause them not to get their money. And so basically not only do they become your partner, they kind of become your boss when it comes to this particular area. So that's something that we run across when we have customers come to us is they've heard of factoring and they're very uncomfortable with that intrusive nature.
Yeah, that you stole the words out of my mouth. It's a very intrusive process. You don't really get to hold any of your own cards. You give up everything and allow them to kind of control the whole scenario. And a lot of times they take over, they're not just going to take over one invoice or one job. It's going to be, if they're coming in, they're going to want all the invoices, not just the one job, one specific one. You're going to have to sign up for a contract with them that provides them more access to everything across the board.
Including bank accounts. Even your credit card accounts that you run everybody's payments through, they're going to want to be able to debit that weekly, sometimes monthly, but most of the times they want to do a weekly or bi-weekly debit.
Wow. Intrusive does sound like the right word. And when we're talking about, are they one size fits all? This seems very constricted and very tight. You don't have a lot of wiggle room to do other things. Like we talked about earlier, having that liquid capital at your discretion, to use at your discretion. Factoring doesn't really give you that. It's a bit of an advance, but there's a whole lot more that goes into it. And it feels like it's very constricted. Would you guys agree?
Totally.
100%. Yeah.
So is there a use case for factoring? Is there a time where you would say like, yes, this is a really good idea? Or is it an option that doesn't hold a lot of weight here? What do you guys think based on your experience?
So I'll answer first. I think factoring is an option that when you're in need and when you're feeling like you may be out of options, that one could come into play. That's kind of how I see factoring being an option. I tend to be a little bit more against going this route, but that's it is an option whenever you're kind of running out of other options, for lack of a better term. So,
and you'll find that Rain and I agree a lot that the factoring is probably, to me, it's the last resort, right above a title loan or going to a check cashing place, because you do lose your identity. You lose the business that you've tried so hard to keep and maintain on your own. This is going to be the last resort. I would use it in a situation where if you knew that you had something, a large expenditure coming, and you really had no other where or no other place to grab capital, if you knew you had a payroll that you weren't going to make, you might be able to leverage factoring to get that money in. But boy, you want to pay it back as quickly as possible. Once they get you, the problem is getting into factoring is easy sometimes to get into once you're approved, but it's really hard to get out of. It becomes a crutch that you don't want to be a part of.
Yes. I made a joke there. I'm going to say it one more time. It's very difficult to get out of, like a very tight sweater.
Oh, there
exactly.
you go.
Exactly.
Making it relevant, Kara.
Yeah. Okay. So I think that's a great overview of factoring in terms of the options that we have and we as in the construction industry as a whole. Thank you guys for speaking to this, because I think that it's important not only to understand what our options are, but again, which one is right for you and for your business. And if you're trying to grow your business, is this something that you want to look into? So that gave, I hope that gave everyone out there listening today a lot to think about when it comes to factoring. We consider factoring to be a little bit of a too tight situation when it comes to your flexibility and things that you're able to do with your liquid capital. And so the next slide, I will admit, is a little bit text heavy, but it was necessary to get all this information out to you guys. So now we want to talk about traditional banking and your credit options. We have lines of credit, we have credit cards, bank loans, business loans, all of these things. And this slide I'm really excited about because, as Rain mentioned, your background is in banking. And I know this type of credit's a little different, but Alan, with your background being in credit, I think you guys are going to have a lot to bring to the table. So if it's okay, why don't we start with credit cards? I feel like a lot of contractors and subcontractors and businesses in general often lean on credit cards, but there's a lot going on when you open up a credit card for your business.
Yeah, so I'll start first. I'll just jump in. So credit cards, you're looking at what's typically it's in your first line. There's high interest rates. There's usually, typically, especially for business credit cards, going to be annual fees attached to that. It's great for daily spending. It's great for emergencies. It's great to, I know people, whenever they think about credit cards, they think about building up points and building up travel rewards and all the different benefits that can come from that. But in terms of financing your, specific jobs and specific projects, I don't know that I would go this direction specifically. I may be getting a little ahead of myself, but I don't know that it's the best choice for that direction because, really credit cards should be used for those daily sort of purchases that you're taking care of on a daily basis. And then also for emergency situations. If you're using it for everything going into the business, then you're kind of overextending yourself and kind of shortchanging yourself from being able to have that flexibility if an emergency comes along. But
Yeah. And one thing that I do want to add before Alan jumps in is all of the options we're talking about today, absolutely none of them are inherently negative.
No.
None of them are poor options or a bad way to run businesses. We just want to speak again at a high level to understand what they mean and how they can help you grow your business. So I know that we have a lot of experience and opinions collectively as a group and as a construction industry. But so I just wanted to make that disclaimer that nothing we're talking about today is inherently negative. It's really just opening up and understanding how can we get better as an industry at making sure that our contractors and our subs are not only empowered to get what they earn and get paid for the jobs that they're doing, but also are able to run their business smoothly and make sure that they're able to meet payroll and do these other things. So, all right, Alan, go for it. Credit card. What do you really think?
What do I really think? I think banking, my brother's a president of a bank, so we have this conversation all the time. Nowhere in the world can you join an organization or have a membership in an organization that plays by only their rules and you have no input. If you're going to be late on the payment, you can't say, please don't mark that down on my credit. It's going to be marked on your credit. They have these commercials about, look, you can fly across the world and everything else. Well, what did our grandparents say? No such thing as a free lunch. You're paying for it. You just don't know how much you're paying for it. Those free trips to Japan and Hawaii, you're paying for it every day. You just don't realize it. And Rain made a great point. It's great for those things that you're paying off on a monthly basis, the day-to-day bills, and get your points that way. But you don't pay that off when they want you to pay it off, or they don't want you to pay it off. It's going to cost you. And the worst case scenario is you're using personal credit cards to take care of your business, and your children and your family, they don't have a say. You're using what's supposed to be taking care of your household to run your business. And that's just a bad deal all the way around. So.
Yeah, you never really want to find yourself in a situation where you're having to use your personal credit for any reason to finance your business ventures. Having those separated is going to protect you as a business and protect your personal credit as well, and in turn protect your future.
The IRS likes that too.
No, that's very true. Yep.
And so the way we're relating it here back to our analogies with the sweaters is that when you think about banking and you think about credit, you're almost drowning in options. There are so many banks out there, so many credit card institutions, so many ways you can get a line of credit, different loans. I mean, even just thinking about it feels overwhelming. And so this idea that, again, credit card can be a great option to build your credit and build your points and being really diligent about paying those things off. But we know that when you start a job, your material supplier wants payment on day one. And you're typically not paid till your job is completed. What is that? 60, 90, 100 days? So some of these options, while are really successful and can get you trips around the world, they may not be right for your construction business. And that is something that is what we're focused on here and today. So we feel that these options are just a little bit too big. You can kind of drown in how many different areas you can look into and how many different directions this could take you. We also haven't really talked about interest rates yet. What does that look like when you have all of this interest with your loans and your credit cards, and you're trying to make these payments, but it's just growing and growing and growing, and again, like, it's too big, you're just drowning. What happens to you when your interest is more than what you're bringing in, and that hasn't even touched like the principal amount on that card?
Yeah, I mean, especially when you're looking at maybe 11.99 on a good end on from a credit card, and then more than likely somewhere around like 23, 24, something like that. So
you're talking percent in
percentages, yeah, for interest. Yep.
Oh, that stresses me out just hearing about it. So that's kind of the high level again on traditional banking and your credit options. And the next thing we want to talk about is material financing. Alan and Rain, also mentioned at the beginning that this is something that they are passionate about and working on. So we really want to take a bit of a deeper dive into this. And so I'll kind of give you guys the higher level and then let y'all talk through a little bit more. But material financing is really allowing a third party to purchase those materials for you. Your supplier gets paid on day one. You strengthen your relationship with those suppliers because they know that they will always be paid on day one. And then you have a much longer time frame to make those payments back. You don't have the 11.99 credit card interest and other things like this, giving you the longer terms and better rates than loans and et cetera. So guys, tell us more about financing. Do you have some good examples of people that have used financing and then grown their business or used financing to get out of a hole? I would love to hear some real world examples.
Yeah. So when you say grow your business, and I know Alan and I both have some pretty good examples for this type of subject, but there's one in particular that I'm thinking of in the Midwest that they came on board with us in August and started doing the materials financing, and really just kind of they weren't sure what to do and weren't sure how to start to grow and how to start to take on those bigger projects. And we worked with them for a couple of weeks and kind of just breaking down options, looking at what options were out there for them and if the financing was going to be the best choice. And I ended up doing a project, and then one project turned into two, that turned into 3, 4, something like that. And it's great to see because they were actually able to start taking larger jobs on. And honestly, they just bought out another company, and they're expanding their services. And he specifically says financing materials was the way that he found the cash flow and the capital to really grow and to be able to, take on this new business venture and expand the way that he wanted to. So it's been exciting to see. He's going to double the amount of jobs that he's going to do this next year and really change his and his business partners' lives for sure.
How do you guys feel like materials financing can change the industry on a whole?
Levels the playing field, I think, between your well-established general contractors that have basically, they already had access to money. This gives access to new companies and small mom and pops and mid-sized companies that have never had the quote access that they had before. Yep. And it levels the playing field and makes them suddenly competitive and puts new people out on the field, which is very exciting.
Yeah, we didn't talk about this whenever we were talking about banking and traditional financing, but a lot of times banks are going to look at, they're not even going to take a look at you unless you've been in business for over 2 years. And even at that point, they're still going to want to see multiple years of tax returns, multiple years of receivables. They want to see that things are on track and know that, they can get guaranteed payment back from what you have going on in your past and coming up in the future. And it's a very also intrusive process from that standpoint. They dive deep into the books to see what's going on. And that does limit you. It limits your ability to grow the way that you want to. And if you are a newer company, just like Alan was saying, this completely levels the playing field and enables you to have that opportunity to move forward and have the chance to take on those jobs and to bid competitively with them, because we're looking at it project to project, and you have that chance to win those projects at that point and move forward.
Rain, wouldn't you agree that this is the least intrusive of all the credit options?
Oh,
I mean, we didn't talk about this before, but
yep.
Really we were talking about how intrusive factoring is. From what I can see, this is probably the least painful of all financing processes.
Yeah, and it's pretty amazing, and I think I'm still amazed by it, even after doing this for a while now. It's amazing that we can look at the job specifically. We can know kind of what the whole job looks like, know kind of roughly what the contractors are stability wise, know kind of where they're going, but then really dive in and just say, all right, what's your invoice look like and what's the contract look like? And that's it. And that's a pretty amazing thing, that it's really not intrusive at all. It's a very open process that we want to know the basics, but we just really want to help you at the end of the day.
Yeah, because you mentioned this, but just to be specific, and I'm going to go to the next slide as well to kind of give a few more details here, but you guys look at the project level. We're not talking like, hey, let's check all of your credit and let's get super invasive. This is like, hey, what is at the project level, what does it look like? What permanent materials do you need? Sounds good. In a nutshell, that's kind of how it goes, huh?
Yeah. I mean, yeah, that's the perfect way of saying it.
And let's talk about this applying in seconds without affecting your credit. That I think is very drastically different from the first two options that we talked about. How are y'all able to do that without checking credit?
When we do our underwriting, once you've submitted, we have a program agreement. Once you've submitted everything that we ask for, which is very limited information, basically all we're asking for is the contract you have with your customer and the invoice. And then our underwriting team gets to work. And what we look at is we do look at credit, but we do a soft pull. It's not going to be anything that's going to drag anybody's credit down. We just want to get a snapshot of how you look in your space of your construction space. That's all we want to know. The major weight of everything is going to be on how safe that project is, how much we can look at it and make sure there's nothing weird about it, like Rain had said before, and what our lien rights are. And that carries the day. So it is, like we keep saying, it's not invasive. It's very not intrusive at all. And we can make those decisions fairly quickly. And much quicker than a bank could, definitely much quicker than factoring. That might take a week, 2 weeks for them to get back to you. So,
oh, wow.
Did that answer the question? I'm sorry.
Yeah.
Yeah, this is all about ultimate flexibility too, and it's about strengthening the relationships that you have around you. So you can work with any supplier. The same people that you use all the time or that you're trying to build a relationship with and prove that y'all can work together for the long haul. We're in for that. We want to help you with that. So we want to work with any supplier. Like Alan already covered, no affecting the credit. You can apply super quick. We're doing 120-day payment terms as well. So it's very flexible. You're usually getting paid on day 84-ish. I think that's the industry average as of this moment right now. But yeah, I mean, it's it's a very quick process, very flexible process. And we're just here to help and strengthen the bonds that you have in place.
Hey, Kara, can I mention Revere Mechanical real quick? One of our customers, they don't mind us mentioning their name. They came to us at the very beginning. They'd only been in business about 5 months. And they gave us their first project and they started doing multiple projects with us. And for 2021, they were nominated to be one of the best up and coming general contractors in Clark County by the Henderson Chamber of Commerce. And so they credit the ability to do material financing in the way to grow their business as quickly and exponentially as they did. So I wanted to give them, give that a shout out. That's a great example of how something can ramp you up quickly when you use something like material financing.
Yeah, I totally agree. And that's a great segue. We do have a customer story here. Vivian Bell, she's an accountant at Mesh, which is a millwork company, a very modern and sleek millwork company, I might add. And, one of the cool things about this product, I think, is its ability to scale people like a sub or a GC, and then all the way through to an accounting department. It might just be you, and it might be that you have an accounting department, but everyone has the ability to be a payment hero and be able to empower their business to grow. And so, I'm not going to read everything that she says, but it boils down to, financing is a great option if you need more time between purchasing materials and receiving your payments. So I think that kind of sums up the bottom that we've been sitting up here at a 30,000 foot view. And I think all the way at the bottom, that's really where this product shines, is in that time period where you're usually really strapped for cash, but this gives you an extended period of time to settle up on all of your payments and such. Do y'all have any other examples that you want to share before we dive into see if anybody has any questions?
Let's open it up.
Okay. So right now we're going to open up for questions. We just have a couple more minutes. So I'm going to give 1 or 2 minutes if anybody's going to type anything into the chat box. But while they're doing that, I just want to say thank you to everyone for joining us on today's webinar. It was recorded, so we will be emailing this out, as well as a few other materials and collateral things that you can kind of take a deeper dive into these options. Also do want to mention LevelSet has a huge, vast library of documentation with everything from factoring to banking to lines of credit, how to use those successfully, as well as financing and an entire construction finance hub, if you will. So I'll send a link to those as well, so you can take a deeper dive into some of those things if you would like to do that. I also will say, yes, yay, yes, Ingrid, we will be sending a recording of this webinar. So feel free to share it, watch it again. Rain's contact information will also be within that email. So if you have any questions directly for him, feel free to reach out to him. Again, my name is Kara, and since we're almost at time here, the last thing I wanted to say is LevelSet does a lot with helping contractors and subcontractors and suppliers with their lien rights. And so we are, okay, perfect. And so, yes, we are indeed, I'm sorry, the chat box distracted me. Our financing is lien backed, which means that you are fully protected and we are fully protected. And so that wasn't something we mentioned earlier, but I think it's important to say. So as we close out, again, my name is Kara. Thank you, Rain and Alan, for coming and hosting the webinar with me. I know I gained a lot of valuable information, and I think our audience did as well. Do y'all have any parting words of wisdom?
Obviously, my information is going to be attached to the email that goes out. If you have any questions at all, or if you just want to talk through options together, I am always happy to do that. Feel free to shoot me an email. We'll get some time on my calendar, and I'm happy to chat through anything and kind of help explore your options as well.
Awesome. Thanks, Rain. All right. Well, thank you again, everyone. Thank you, Alan. Thank you, Rain. We'll see you all next time. Bye-bye.
Bye-bye.
Thank you.